Today's episode is brought to you by Stream by AlphaSense, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free trial at www.streamrg.co/PMC. That's streamrg.co/PMC. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. You can follow Planet MicroCap on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And you're listening to episode 225. If you have any questions or comments, please feel free to tweet at me or shoot me an email at rcraft@snnwire.com. And when you do get a chance, if you like what you hear, please rate and review Planet MicroCap on iTunes and Spotify. It really helps provide feedback for me and spread the MicroCap message. Special thank you to our sponsors for today's episode, Stream by AlphaSense, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free trial at www.streamrg.co/PMC. That's streamrg.co/PMC. And Quarter, whose mission is to change the way people look at investor relations and create a completely new bridge between companies and stakeholders. Visit your app store of choice to try it out, and that's Quarter, Quartr. Now, if you're listening to this episode today or anytime on May 4th or 5th, then we are currently in Las Vegas at the Planet MicroCap Showcase. All the company presentations are available for listening via webcast, both live and archived, and all the keynotes and panels will be up on the SNN Network YouTube channel shortly after the event is over. If you are a listener and you're here now, well, I guess I'm seeing you in Las Vegas. Now, for this episode of the Planet MicroCap podcast, I spoke with Mariusz Skonieczny, the founder of MicroCap Explosions. We were connected on Twitter when I put out a tweet asking for microcap investors that I haven't had on the show yet, and quite a few of you suggested Mariusz. I really enjoyed getting to know Mariusz, his background, how microcap investing fit his personality, and how he was able to turn a $10,000 investment in 2009 to $7 million in 12 years. Thank you again for tuning in to episode 225 of the Planet MicroCap podcast, and please enjoy my conversation with Mariusz Skonieczny. This episode is brought to you by Stream by AlphaSense. You can find them at streamrg.co/PMC. That's streamrg.co/PMC. Stream is an expert interview transcript library that is starting to become an integral part to investors' research process. They have a number of interviews on a wide variety of companies, including TMT, consumers, industrials, real estate, and more. Stream provides over 300 expert interviews per week, and 70% of their experts are found exclusively on Stream. Stream is unlike any other transcript libraries. Stream integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Stream's community of experts and thought leaders partner with Stream to build their professional brands and expand their industry influence. Right now, there are approximately 8,500 plus call transcripts available. For more information, please visit www.streamrg.co/PMC. That's streamrg.co/PMC. Welcome back to the Planet MicroCap podcast. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And joining me today, my guest is Mariusz Skonieczny. He is the founder of MicroCap Explosions. We were introduced, I put out a tweet not that long ago of who are some of the best microcap investors that I've yet to have on the show. And quite a few of you co-signed Mariusz. So we made this happen. Dude, welcome to the show. How you doing?
Yeah, thanks a lot. I'm happy to be here.
It's great to have you on. So before we get into strategy and learning a little bit more about MicroCap Explosions, can you start us off with where did your passion for investing begin?
I guess when I was a little kid, I wanted to be a cashier because I saw cashiers were counting money. So right there, when I was a little one, I'm like, I know I want to be something to do with money. So that was in Poland because I was born in Poland, and then I came to the US in 1996. And just went to high school, finished my high school here, got my degree in finance, and then I kind of entered the money space, but first on the real estate side, because I was interested in real estate investing. At that time, the Poor Dad, Rich Dad books came out, and that's where I went. So I figured I might as well learn how to appraise real estate in order to invest in it. But then as I was in the space on the commercial and residential side, and also on the brokerage side, I realized that I didn't have the passion for the real estate the way I had for stocks. And at the same time, I was already studying everything Warren Buffett wrote about: value investing, intelligent investing. And when 2008, 2009 financial crisis hit, I went to my boss and I said, December 31st, 2008 is my last day in real estate. And then I went full time into investing, and mostly into small cap companies. And it was kind of fueled by Warren Buffett's comments, actually, at one of the Berkshire Hathaway meetings when he was asked, what would you do if you had $10,000 to your name and you were starting off? He said, I would go into small companies. I would go into obscure places simply because the investment industry is not set up to recommend those investments. And that's where the highest probability of mispricing occurs. So that just kind of sent me in that place.
So talk about timing. Right? Last day, end of 2008, and then, starting in 2009, I think we hit the bottom. What was it, March or February, something like that? Yeah. I mean, obviously this, I don't want to make you feel like you have to be an oracle and like you knew or anything, but I mean, talk about that timing. I mean, that you must have been like, wow, that was,
nice job. It really has to do with my personality. It's more like, when I read his stuff and it's like, be fearful when others are greedy and be greedy when others are fearful. I mean, it's easy for me from my personality standpoint. I always felt in my life to be an outsider, to be like, not go with the crowd, to like think for myself. So that was always my strength. So it was like a natural thing to do. Okay, the house is burning. Fine. Let's go in and take care of the fire, So of course I didn't know, like you never know like when is something going to bottom, but I mean, you can see people are freaking out. You're like, okay, let's test ourselves, see what we can do. And it was natural.
Got it. So, I mean, at that time, as you said, you got into small caps. Had you looked at small caps even prior to that? So you knew how you wanted to deploy capital once the time came, or was it January 1st, 2009? I know I want to look at small caps. Here we go. What was the?
No, I was, the entire time that I was in real estate, even after I graduated from college, which was in 2003, I was already looking at companies. Like at that time was like Enron. I looked at Enron before it went down. So like I kind of cut my teeth already through those years. I looked at the big companies. I looked at the smaller companies. And so I guess at the beginning of 2008, 2009, when I really went full time, I guess it was kind of like a mixture of some of them were bigger, some of them were smaller. Like I remember looking at a company called Arcticat, which was the snowmobile. So that was considered to be on the smaller side. But I just find them more interesting, the smaller names, because you see, another big thing in my life was that when I came to the US, like in my mind, I was coming to the US to play in the NBA. Like I was so obsessed with basketball. Okay. And we didn't have basketball in my country at that time. It was just at the beginning stages. And, Barcelona 92, the dream team was kind of like planted the seeds. So like I wanted to play basketball. And then when I came to the US, it was like I made the basketball team, but they never let me play. They let me play like 30 seconds for the whole season. And my entire life up to coming to the US was all about competition, because I was sports. I was a track and field star in Poland. And when I came here, I was like, they broke my heart with this basketball thing. And that's when I realized that in order to have my efforts and my work bring the best results, I have to go into places where there's very little competition. And that's what microcap space is all about. You can do the work, you can do the due diligence, you can do your scuttlebutt, you can, call the CEO, call the customers, you can do all this kind of work, and it actually brings you benefit. What good is it do for me to do this kind of research on Apple or Tesla? Like, it doesn't bring you any benefit because everybody already knows about these names. But if I do it on something that's, on OTC or TSXV or Canadian Stock Exchange, there's no analysts covering this thing. Like institutions are not in it, right? They're too big to play in that space. Most of the retail investors are chasing, crypto, AMC, GameStop. They're busy playing games with shiny objects. And then, so you have so little competition in that space. So then when you put that kind of work, you really uncover what's behind the company. I mean, you can make tremendous amounts of money when you do it right. And I started with 10 grand in 2009, and I turned into 7 million over those 12 years. And that's purely because the work that I put in, gave me returns. And if I did the same amount of work into large caps, forget it. I might get maybe 10% return per year. Yeah. So it's just that equation that, can really change your life.
Absolutely. Congrats, man. I mean, look, you're the American success story, right? Like that's, I mean, that's really what it comes down to. You came here from Poland.
And in 2000 when I was leaving the real estate industry, 2008, 2009, I wanted to get a job first. Like, I applied to Morningstar. They rejected me immediately because I didn't have any experience. And I remember how I called them up and I said, what could I do to improve my chances of getting a job at something like Morningstar? And the lady told me, I read lots of books. And I just started laughing because at that time I probably read like 300 books. And so I was like, okay, screw reading books. Instead, I wrote 10 of my own, but it was kind of like I couldn't get a job in the industry. No hedge fund would hire me then. So I just went on my own. And now I can get a job with the hedge funds, but for what? What are you going to pay me? Like, I don't need you now.
That's awesome. So, okay, you mentioned your performance from 2009 to now. How did you cut your teeth? I mean, what was the sectors that really were, stood out to you, contributed to some of these big wins? What was it?
Well, let me rephrase this. Which sector not did you cut your teeth on? Which sector did you lose all your teeth on? How about that?
I'm handing the mic over to you. I'm done. I'm gonna let you do. I'm gonna hang it up. I'm gonna go.
I mean, that was the mining sector. That was the mining stocks. Okay, look, I entered it 2008, 2009. It was great. At the bottom, anything you touched did well. And then in 2011. I decided to become a macro guy and looked at gold, the Fed is printing money. So that the most intelligent way is to go with the miners. And you know what? How about some junior miners? Oh my God. And so from 2012 to 2016, I thought I was going to commit suicide with these crazy companies. Like, I have never seen more professional fuck-ups in this sector that I have ever. I don't think I will ever see anything worse in this sector. I mean, I don't think it was possible. You hold like 10 of them and 9 of them like go bankrupt. I mean, it's like, even if I tried to screw up, I don't think I could the way they do. And it goes from, one company, generating $300 million of cash flow over the years. The market cap was like 50, went down 98%. And like, how do you do that? How do you create almost $500 million of cash flow? And then you ended up having a 20 million market cap at the end of the day. I don't know. I don't know how you do that. Or another company having 200 million ounces of silver in the ground saying, oops, you know what? We made a mistake. We don't have that much. Sorry. Boom. The stock goes down, 80 or 90%. I mean, the kind of things that happen in that space, and I'm not saying these people, are idiots or anything. But the quote that Warren Buffett says, buy businesses that even an idiot can run, because one day an idiot will run it. Well, for the mining stocks, I have a different quote. Don't buy such a terrible business that even a genius cannot run. That's my quote for the mining stocks. So that's where not only did I cut my teeth, I lost my teeth and half of my jaw.
Gosh. Wow. Well, I'm glad you came out the end of it. I mean,
I don't even know how I came out alive, but yeah.
Oh, man. No, that's. Hey, look, some of us go to university to learn. Some of us learn like this, and we pay our tuition that way. So, I mean,
and you know what? Your own mistakes, you learn them the best. You truly do. So now when I look at microcap stocks, I am very careful as to the quality of the companies that I choose.
Well, at that time when you did look at junior miners, and in 2011, like we were talking off camera, like I mean that was the top at that time for like basically 10 years. And so, I mean, what was some of your what was your investing philosophy at the time, and then how has that evolved to now?
Well, you see, so I started off with learning from Warren Buffett, Charlie Munger, the value investing, gurus, and Joe Greenblatt, and all the people that we know. And then when gold was hot in 2011, I got a little cocky, like, yeah, I can do better. I know more than Warren Buffett. He doesn't like gold. He doesn't know what he's talking about. I can do better. I can generate better returns. And of course, it taught me a lesson that, hey, Buffett, maybe knows a thing or two about investing. So now I am going back to it to really understand that the businesses and the qualitative aspects behind those businesses, that it matters. Because that if the business is good, meaning it doesn't matter if the business is big, small, or whatever, like, I want revenues that are high quality revenues. So I want revenues that have high gross margins. I want revenues that are recurring or repeat revenues. I want maybe the clients to have some kind of switching costs, that it's not so difficult to switch from one to another, or have a business that has a network effect. As more people are using a platform, more other people want to be on a platform, like maybe a Poshmark or eBay, or all things like that, or have a business that's developing some kind of brand. So I stay away from those businesses that have terrible margins or that are really, really high capital intensive businesses, because growing revenue versus growing revenue is completely different thing. If you grow revenue and doesn't require a lot of capital, that's a lot better than growing revenue that requires a lot of capital. Growing revenue that is high margin revenue and recurring revenue is more valuable than growing revenue that is not. These are completely different things. So that's where I'm really super disciplined about right now. And I am very quick to say no to ideas. And I will say no 99 times before I say yes to something. And that's purely because of, the pain that I went through. If I didn't go through this pain, I would probably go into the microcap space and be like, you're revolutionizing this. You're disrupting this. Let me buy a shitload of the stock. No, I've been there. I've done that. You guys go, take that chance, and good luck, because you need all the luck that you can get.
I'd like to take a quick second to tell you about this episode's sponsor, Quarter. With Quarter, you get frictionless access to conference calls, investor presentations, transcripts, and earnings reports from markets all around the world, straight from your pocket for no cost. Quarter's mission is to change the way people look at investor relations and create a completely new bridge between companies and stakeholders. The first step on this journey is to let you, the user, interact with the company's content while you're listening. Visit your app store of choice and try it out today by searching for Quarter, and that's Quartr. Now back to the show. Absolutely. So I wanted to talk about your process, because when you're I didn't say this in the introduction, but you said it yourself, you're also the author of 10 books. One of them is called MicroCap Investor. And in the book, it's a short read, everyone, and it's available on the microcapexplosions.com website as a PDF. And one thing that stood out to me that I thought was really interesting that I wanted to talk about here was your due diligence process and this idea of the quick versus medium versus the full due diligence. And that might seem simple, very simple idea. Everybody, some of the pros and folks who've been in microcaps who are listening to this are probably like, okay, I think I know what you mean. But I think there's a little bit of nuance to this because some of us probably take for granted when you open up that, this balance sheet, or you just take one look at a company and you're like, oh, no, next, right there. But for those who may not be as well versed in microcaps or just in looking at the markets in general, sometimes they haven't done enough to develop that skill. So can you break that down for us? How do you define quick, medium, and full? And then how does a company that is interesting to you go from quick, then to medium, and then to full due diligence?
Okay, so first, the way I look for companies is I don't use any screens. No, the computer, I don't want the computer to find me stuff. So I will go through every company on an exchange, whether it's Canadian, TSXV, or OTC. I will go one by one. So for example, I went recently through 700 companies on Canadian Stock Exchange, one by one. And so I look at everyone, and that's the quick due diligence. I'll look at it, maybe skim through the income statement. But most of the time when I look at the website or look at what they do, like I know right away whether I want to pursue it or not. Like, if they're looking for a, cure for cancer, no, thank you. They have zero revenues. Yeah, I'm sure you have a great future, but no, thank you. Oil and gas, no. Cannabis, definitely not. That's like I make fun of this one statement. I don't know if you heard this, but like on the Canadian Stock Exchange or TSXV, I say that the average investor is high on pot and is looking for gold. Okay, and then when they get too anxious, they eat a bunch of mushrooms to calm down. That's what they want. Like that's the kind of crap that they want. So that's not the kind of crap that I want. I want real businesses with real clients and real solutions. Yeah. So that's the quick due diligence. Like I'll go through every single company and I'll do a quick due diligence and I'll write down the companies that I want to go back to. And then that going back to, maybe I'll spend a little bit more, 20 minutes, maybe see if I'm still interested, So again, I'm looking for a good businesses. I'm looking for a business that has clients. I'm not looking for a business that has lots of promises, because believe me, every single company on these small exchanges, they have the next gold deposit. They're going to be the next Amazon. They have big plans and big promises. I want to see some proof, and the proof is revenues, because revenues are a proof that the company already solved the problem for somebody, that somebody wanted to pay for that solution. So that's important for me. And then once I have those companies, narrowed down to the ones that I really, really want to look at, that's when I will go into my full due diligence. And that's when I really do a lot of work. Scuttlebutt is important for me, which means I will get on the phone and I will call everybody I can get on the phone. I will call their clients, suppliers, employees, former employees, directors, and of course the CEO and the management too. But I usually call them last because, they'll just tell you what you want to hear. By the time I'm done with the employees or former employees, especially former employees, they'll tell you all the dirt that you need to know. Then if you're dealing with a liar or what kind of person you're dealing with, and I'm not like looking for something perfect, because there is no such thing as a perfect stock. There's not. But I want to know what I'm dealing with, because when you go to these companies' websites, it's all great. I mean, they are always the leader in their space, pioneer. I love that. But in reality, are they really that, right? So that's where it comes to, like, I want to get on the phone with the clients, and I want to know, hey, look, and a lot of times these people will like, why are you calling me? Nobody ever called me. I'm like, look, let me cut straight to the chase. I'm interested in investing in this company. You buy from them. I don't want to lose any money. Okay. So just tell me what I need to know. Like, am I going to lose my money? Do you like the product? Do you not like it? Why are you using the product? Why aren't you using the competitor? What's so special about it? And you do this with enough people, whether it's clients or former employees or whatever, you do this enough and you're like, okay, I think I have something here, or I don't, and I do this in conjunction with, of course, reading the financials, because, like the number one thing that I want is revenues. Second thing is I want those revenues to be high quality revenues, repeat customer recurring revenues and high margins and things like that. And of course, I don't really want to overpay for those businesses. I mean, I don't mind overpaying a little bit, because if something is growing really fast, I don't mind if let's say it's worth $1 today. Can I pay? Of course, I would love to pay 50 cents, but am I going to pay like $1.50 or $2 or even $3 if I think it's going to be worth 10 in the future or more? Yeah, but I'm not going to pay, just any price for it. I'm not going to pay like 1,000 times revenues just because they have a big addressable market. I mean, every single one of them will tell you, oh, look at this. We have, billion people in the world. If we can capture 1% of that, we're going to be rich. Like, okay, that's not going to fly very well with me,
Got it. All right. So one quick follow-up on the full due diligence side of things, when you do, after you've done all your scuttlebutt research and you do finally talk to management, what are some of the things that you look at when you do finally talk to them? Are you looking to verify some of the things that you uncovered while doing that research, or do you ask certain questions in particular that give you a lot of information?
I don't really have a particular plan. I just kind of, have the conversation and let the conversation flow. I want to make sure, I do want to verify things, right? I want to know what their plans are. I want them to teach me about the business, because they are the ones that, are the best at this business. So I want them to help me understand what it is that maybe I'm missing. What could the future look like, And, I want to make sure that this business is truly what I think it is, So I don't really have like a blueprint or checklist. Like, I already know what kind of businesses I don't want. And so by the time I'm already talking to them, I already, like the business, because if I don't like it, I'm not going to waste my time. I already like it. And, I've done a lot of work trying to research what this business is like. So most of the time, they just take my understanding to the next level.
Got it. Without naming any names, I mean, do you got any war stories where like it hit every checkbox? You thought this was, all right, this looks like maybe one of my next big winners or something, and then like something came up in the scuttlebutt or talking with manager or something where you're like, oh, wow, okay, wow, I'm really happy I do this type of deep dive due diligence, so I didn't lose my shirt on this one. And you don't have to name
No,
the name.
usually the horror stories that I had so far were with the mining stocks, and I also did a lot of work on them. It's not like I didn't, but the business was just so unknown. But just because you do this kind of work doesn't mean the stock price won't go down. And like recently, I did this kind of work on one of my companies, and the stock is down like 50%. So then this kind of work determines whether you have the conviction to hold it or not. But usually when I pick a good business and I don't overpay for it, it's going to work out. But with the mining stocks, it didn't work out because it wasn't a good business. It wasn't even a business. They're just assets. So far, I'm okay with these things.
Very good. And do you invest in ideas across all the different North American exchanges, TSXV? I mean, where you do find the non-mining cannabis, psychedelics, those healthcare. Do you look everywhere?
Well, right now I have enough ideas from the TSXV, Canadian Stock Exchange, and OTC, and even the NASDAQ. I have enough ideas that I can't even put enough money into all of them as it is. But, I'm thinking of branching out if I have to. I mean, you can go to AIM in London, or like I speak Polish. So I was thinking like, hey, I can go through all the companies on the Warsaw Stock Exchange, that I speak the language. But just right now, I have like so many ideas that I can't even deploy all my money into all of them. So why bother to even go there?
Right. What's your concentration versus diversification thought process? How many stocks do you typically hold, or and then also how do you size into them as well?
So right now, I own about 8 to 10, but my 4 biggest positions are like super huge. So the other 6 are not even relevant. Even if they went to zero, they wouldn't even do anything. And it has to do with the conviction that I have, and it also has to do with that sometimes these companies I participate through private placements, and so that's one of the things that we do at MicroCap Explosions is we inject capital into some of these small companies, and we create our own success by injecting the capital, which then can be used to grow or be more successful. And then when you do that, you get locked into the private placements. And like if you're in the US, the lockup period is like 12 months, and then you're locked in even more through warrants. So part of the concentration is because I'm kind of being forced through those lockups.
Got it. So tell us a little bit about MicroCap Explosions. When did you found it, and what's your goal with your newsletter?
So it's not a newsletter; it's like a private membership website where I share investment ideas that I find, and it was born kind of during COVID when I was bored, didn't know what to do, so I started making videos on YouTube during COVID and got some a larger following at that point, and people kind of kept asking me, hey, do you have a service or a newsletter or anything like that? And I really didn't want to start one because the mining stock disaster caused me to lose two businesses. I used to manage money and I used to have a newsletter. So the mining stock took care of 2 of these businesses all at once. So I didn't really want to start another thing, but they just kept bugging me. So then I was like, okay, fine. I made a video and I said, look, you guys keep bugging me to do something. Okay, fine. Let's do this. If I were to start something like this, let's call it MicroCap Explosions. I'm not going to start it if I don't have enough interest from the beginning. And also it's not going to be cheap. Like it's not going to be, $100 a year. It's going to be a couple thousand. So you guys tell me, I'm releasing this video. Put your name here in the comment section or whatever. And if I have enough people, I'll start it. So I posted the video and then I went for a walk. 20 minutes later, I come back and it's like 60 people signed up. I was like, okay, I can do that. So then I launched it. And we went from 60 to we're a little bit over 300 right now. And I kind of want to keep it at the level because I don't want to have 1,000. So what happened is that as I was getting more and more people, I kept increasing the price because I'm like, I need to, reduce the demand because I want to keep it at that level because we're dealing with microcap stocks. And if I expose the idea, I don't want the idea to just shoot up and for people not to be able to get the shares because of lower liquidity and also with the private placement. So let's say if we do in total since the beginning of 2020, we did we financed 4 companies through 6 or 7 private placements, and we raised $30 million. I mean, that's a serious dose. $30 million from 300 people, that's some serious money. And so, I mean, we had a huge success with one particular company that we financed, put I think close to 20 million or 15 million into it. I mean, that was people made 300 million on it from that investment. So, so that's what we do, So it's not just. It is me sharing the ideas. It is me bringing the management for interviews and live calls and things like that. But it's the big portion of it is those private placements, which we create our own success. We become our own catalyst. And, also if the money that we raise is successful, then not only does the share price goes up, but the people make even more money because a lot of these private placements come with warrants, and then the warrants go into money and people just make even more money. So that's the whole idea behind MCE.
And Mariusz, for full disclosure, when you're talking about, in the private, but you're what you mean is that you're not taking any broker fees. You're more saying this looks like an opportunity, and then you're investing your own money, and then pointing folks in that direction.
Right. So the way these things work is that the company, let's say, has a application, and so everybody fills out their own application. It doesn't go through me. It's just kind of like, hey, we get together and be like, let's all. I mean, everybody decides on their own, if they want to participate, but it's all under their name. Yeah. It's not like I'm a fund or anything. I'm not a broker. I don't take a brokerage fee or anything like that. And if there is any sort of thing, it's always released. It's always disclosed in the press releases, and it's always, vetted through the lawyers.
Very good. All right, cool. Just I had to ask, right?
Yeah.
So moving, another question that I have for you, and it's funny because listen, you've talked a little bit of shit on some on mining in our chat today, but you actually, I mean, there's one company on your, I think that you mentioned on your YouTube channel. So it's not that you stopped investing in it totally. It's just you're more like the majority. For you has been a not so pleasant experience. So, I mean, were you able to then go in and still invest in a mining company despite everything that you went through?
Well, that company actually came as a result of the disaster, because the disaster introduced me to this company, and this company turned out to be successful. But I will say one difference though: mining company versus Explorco. You see, mining companies, they actually produce their product, gold and silver, and they put mines into production. Those are the disasters that I don't want to touch. Now, something like Oracle, which is what you're referring to, they don't have any plans to put their property into production. All they're doing is a bunch of studies, bunch of drilling to make the studies, and then they're going to put the property in a bowl, package it like a nice product, and then sell it to a major. So actually, I made a video on my YouTube channel saying 10 ways to make money in mining, right? So one way is to have a mining newsletter. Another one is to have mining interviews. And another one is to sell the nightmare to a major. So that's the definition. Sell the nightmare. Let them deal with the problems. You get a feasibility study, you get all these appraisal reports, all these graphs, all these economic studies, wonderful net present value calculations, and then let the major take the nightmare, let the major run and make all these mistakes, overruns, and all these headaches, and that's one of the best ways to make money in mining through that. But even with this one, I hope it's my last one. If I ever get involved in anything mining related, it's going to be a very small position, very small position. I just want to put that nightmare behind me.
Totally understood. So just so we have it clear set out. So full disclosure, you are a shareholder still in Aurora.
Yeah.
Okay.
Yeah.
So we talked about a few investing experiences so far on here. What would you say of all the ones that maybe one that you didn't speak about already on here? What would you say is one that really changed your career the most?
Well, I mean, this one changed my career the most from the point of view of the returns that I got. I mean, there were a lot of other successes that I had in the past, like Arcticat, which was in 2008, 2009, it was trading at less than inventory, and it turned out well, but I didn't have that much money invested at this point. There was another company, Straight Path Communications. I'm sure you've heard of it, which, it was the spin-off from ADT, and then they had these, the wavelength, I forgot, the Spectrum. They had the Spectrum that ended up being sold to Verizon. So there was a lot along the way, but this one really changed my life and took me to a different direction. And now, because of that, of course, I'm able to, over the time, finance other great opportunities that I have currently in the portfolio.
Absolutely. So we're about there. what would you say what advice do you have for new investors in microcaps or just anyone in general when it comes to investing?
I would say think independently and stop following people on Twitter. Okay? Because I don't know about you. I have never had a great success following somebody else. Never. I only had great successes finding the idea on my own. Because by the time everybody is yapping on Twitter about something, like right now, you go to Twitter, what are they talking about? Everybody freaking wants to buy oil stocks. Okay? Everybody wants to buy oil stocks. It's almost like, I just want to buy oil stocks. I don't care what price. I don't care if I do diligence. Oil is going to the moon. I want to buy oil stocks. You know what? Oil is on first page of the newspaper right now. That's not how you make money. You make money finding stories and opportunities that are on page 50, 16 of the newspaper or whatever, or people's attention. You get on them and then you can hold them. But when they reach the page 1 of the newspaper, CNBC, think very hard about maybe getting out of them at that point and find something else that's somewhere else, not when everybody is talking about it. So think independently. Don't look for ideas on Twitter. Come on, go directly to an exchange. Go through each company one by one, and you will find so many ideas that you never have to go on Twitter again.
Mariusz, that's so much work, though, man. That's too much work. I gotta go. I gotta go on the exchange and look at all this stuff. I mean,
I know you're joking, but okay. You see, that's the difference between the best and the rest.
Listen, I agree with you 100%. I was just being a dick.
Yeah.
But I could not agree with you more. You got to do the work. I think thinking independently is by far, even if, and the funny thing is you can still be inspired, whether you're on Twitter or any of these other forums to find that idea, but you need to come up with your own thought process and thesis around that. Because if you're just mimicking somebody else's, you're not going to have the same conviction.
Yeah.
I know from experience.
You know how they say you can borrow somebody's idea, but you cannot borrow someone's conviction.
That's right.
100%. And we all know that stock prices, especially for the microcap stocks, they fluctuate a lot. So then your work, your homework is what gives you conviction. I mean, how many times I would buy a stock, okay, for a certain price. I go and take a nap, and that thing is down 30% because John from North Carolina decided to unload his position all at once, no market order, while I was sleeping. So it's like, what do you do? Even the idea that, the Oracle idea that was like $100 for me. At one point, I bought it for 4 cents. It goes to 8 cents. I'm talking on the phone with somebody and I see it go down 75% while I'm on the phone. Okay. Welcome to the microcap world. It's like, so what do you do? Like, what am I supposed to not finish the phone conversation? I mean, of course, like I have enough conviction. I knew it was going to recover, but it took 2 weeks to recover. But if you don't have that conviction, then it's like you can get a heart attack. The other day, I was looking at one of my positions and the freaking thing went to zero because like it went dark and stuff. And then the brokerage account was showing zero, like 99.9%. It's like, what do you do? It's like, I know it's like some stupid mistake. And then of course it recovered, but that's just an example of it's crazy stuff that happens in a micro exchange. So you better understand what it is that you hold. You better understand the fundamentals, the business, so that, you can still have a heartbeat by the time you're done investing.
I mean, I think that's a perfect place to end it because it's so true, man. But Mariusz, with that, man, absolute pleasure, dude. Where can folks go and follow you on social media as well as find your website?
Yeah, so my website is microcapexplosions.com. It's plural. And then if I would say, I have a YouTube channel. I'm trying to do my best on a YouTube channel. Take my impossible to pronounce name, put it into YouTube, find my channel, subscribe, and then, hopefully, you'll enjoy the content that I'm putting out.
And people can also follow you on Twitter at Classic Value INV. So,
Yeah.
and don't, I think I got the pronunciation pretty right on your name today. I that's why I did it very quickly at the beginning, because I was like, okay, it's fresh. So let me get this in. So with that, Mariusz, thank you so much for joining me today. I really do appreciate it. Good luck, stay safe, and I look forward to our next update.
All right. Thanks for having me.
Thank you. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.